In this video, we talk about trying to find a property at the beginning of 2021. Stay tuned. What's going on, everybody? It's Rob Campbell, the mortgage broker with the Rob Campbell Mortgage Team. If you haven't done so already, please consider subscribing and clicking that little notification bell. When you click that bell, you'll get notified whenever we upload great content just like this. And would really appreciate a thumbs up as well, as it helps us with our good old algorithm juice in the YouTubes. It's January 2021. It's not supposed to be this busy in the real estate market, and we are already seeing tons of buyers looking to get pre-approved for a property that they can buy. And the biggest question I get from buyers and from realtors is the same question over and over: are we good to go in firm? And the reason they're asking that is because a clean offer, right, a clean offer with no conditions, is obviously more appealing to a seller when there's 10 or 20 or 30 offers on a property. Some properties we're seeing north of 40 offers on the property, which is absurd. And it's a little daunting for first-time buyers when they're trying to find a property that will be their forever home, or be the one that they really want to move into because it fits their needs. And this video is basically just some advice on what buyers need to be thinking about going into this market, or if you already are currently in this market. And we're going to touch upon the 4 really important things of the home buying process in this market, or just in general, but particularly in this market. So when you are looking to buy a property in a super hot market like this, a seller's market where properties are getting bullied offered, or buyers are putting over $100,000 or $200,000 down more on the property than what it's listed for, it can become very daunting for the first-time home buyer or even a home seller. We have multiple clients who are looking to sell their home and to find the next home, but they can't find the next home because there is no inventory at this time. We're talking the 3rd week of January in 2021. So I thought it would be informative to give you some of the thoughts from my side, from a financing side point of view, on what you need to get ready to offer on a property. So I would say that the biggest thing, the number one thing you need to think about is risk. Okay, and risk would be, if you offer on the property, will it appraise? Okay, so if you're offering 500, will it appraise at 500, or will it come in at 400? If you're offering 700, will it come in at 600? This is a number that you and your realtor will have already ironed out with comparable sales, but also knowing that there's multiple offers on the property. If there's only one other offer on the property as well as yours, maybe you're looking at a $10,000 difference. I don't know what that number is. I'm not a realtor. Do not listen to me. Don't take this as advice. This is educational purposes only. Don't sue me. Disclaimer, disclaimer. But if there's 20 offers or 40 offers, it's probably going to be $100,000 over what the listing price is, if the listing price is a reasonable price for what it should be worth and not lowballed. So the biggest thing for you is risk, right? And the part of the risk mitigation there is having a financing condition. And obviously you can't do that in this market. But here's where we come from on our side of this equation. We can't tell you to go in firm. The fact of the matter is that the broker or the banker doesn't actually have the money. The bank or the lender that we work with has the money. And in the fine print of a mortgage commitment, it will say that the lender at any time in that process can cancel their approval right up into the day of closing. That sounds a little bold, but lenders have the right to back out of deals. And when you go in firm on a purchase, things need to be done. Credit needs to be checked. Title needs to be checked for the property. Income and the property itself is the big thing there. So we're going to dissect all of this risk in some subsections here. One of them is being credit. So your credit score is really important. Are you paying your debts? Have you paid them on time? Have you deferred on debts that you haven't made good on yet? Do you have any late payments? Have you had a mortgage before and had late payments on the mortgage? That's a big no-no on a credit bureau. Okay. Do you have any judgments pending against you? Have you filed for bankruptcy and not been discharged? Have you been discharged but within a 7-year time frame? Do you have any debts outstanding in collections that you haven't paid out in full? And if you have paid them out in full, how is your credit history since then? How many active trade lines do you have? How many loans do you have active? How many credit cards do you have active? These are all questions that come into the credit scenario, not just a credit score, right? But the credit scenario. Another is income. Okay, so this is a big hurdle that that can nip you in the bud should this come up and not be looked at thoroughly. So income being, what type of income are you making? Are you self-employed or are you a salary or hourly employee? If you're a salary or hourly employee, are you guaranteed your hours? If you're a salaried or hourly employee, are your taxes being taken from you by your employer and paid and remitted to the government, or are you having to file that on your own? Because if you're filing that on your own, you're not an employee. Where we see a lot of this is union members, people who are part of steelworker unions or pipe fitter unions. Some places will have the employer remit the taxes for you. So you work 40 hours, your employer takes the taxes owing on that 40-hour income and sends it off to the government. But some union halls pay, the employer would pay in bulk, right? Piecework, contractual work. That income's paid to you in gross, and then the labor worker, the employee or the union member would have to then take that money and pay their own taxes at the tax time. So that's just a small example of what we talk about when we're talking about how do you get paid. Another thing we get is people when they say that our income is, well, I make $100,000 a year. And then we find out that they just started their job 3 months ago and they're on a bonus structure, allegedly on a bonus structure, and the bonuses haven't come in. There's no track record of the bonuses. Before they started that employment, they were an hourly employee in a different role. Employment's a huge part of this application process. And that if the employment isn't verified and these discussions aren't being done prior to you making your offer, trouble lies ahead. Okay. Also, the down payment. This is a very big factor of this environment. If you're putting less than 20% down, by law in Canada, you're subject to lending criteria and guidelines that are reviewed by the government. And they're put forth by the 3 insurers in Canada. CMHC is the most obvious one that everybody knows about. The other are Canada Guarantee and Sagen, which used to be Genworth. And these rules are set in stone. And if you can't qualify on those rules at 5% down, you're not going to qualify on them on 10% down or 15% down. Maybe you will qualify when it comes to ratios, but that's a whole different topic. What I'm saying is if you're putting 20% down or more in most markets, you will have some flexibility there with getting a solution. If it doesn't pan out with your lender of choice, there's going to be a solution, albeit it might be a costly solution because it might be an alternative lender, but you will have a solution there for you at 20% or more down. Now, having said that, in this competitive market with no financing conditions being desired, the question you have to ask yourself is, what's your backup plan? If you buy a property, you bid on it, you bid $200,000 over the listing, the appraisal comes back at what the listing was, you now owe $200,000 over what you're going to get financed based on. And that little thing that's called an appraisal is a very important thing, because why do we need those appraisals? Because lenders want to mitigate their risk when they're lending their money to you. And how I always phrase this is, if you get abducted by aliens the day after you close on that home, the lender has to sell that property. Lenders do not want properties in their portfolio. They want borrowers paying money to their bottom line so that they can make a profit on those mortgages. They don't want to take your home. If they have to take your home, they want to know that they can sell it at fair market value. Well, what's fair market value? It certainly is not $200,000 over listing price. This is an unhealthy market, and people paying $200,000, $300,000 over listing aren't getting it financed on the $200,000 or $300,000 over listing. They're probably out-of-town buyers that are from a big city like Toronto, like Vancouver, who have sold in the city and got a huge down payment that they put down on the home. So be very aware of down payment, because down payment is a big portion of all of this. If you only have 5% down, and I say that not disrespectfully, but 5% down in this market is a lot of money for people, but it's not a lot of money to take risk on. What you need to do is make sure that you have a backup plan. Is there the bank of mom and dad? Is there the bank of grandma who's very wealthy and willing to write you a check? If you don't have these backup plans, you can't go in firm. There's no security there for you to go in firm. If you're going in firm on a purchase and some of these things in this equation are not set in stone, and you don't have that money there ready to go, you're putting yourself at great risk. Nobody's going to be able to get you out of that risk. Your realtor's not going to get you out of that risk. Your mortgage broker or banker's not going to get you out of that risk. Your lawyer's not going to get you out of that risk. If you put a firm offer on a property with no inspection and no financing condition, that's on you, plain and simple. So it's a pretty crazy market out there right now to be taking those types of risks. Make sure you have the backup plan. The property is a big part of this equation too. What are we talking about? Are you buying a marketable property in a neighborhood that's in a city of 100,000 people or more and can be sold instantly? Or are you looking at buying a property that's rural and it's on well and septic and it's across the road from a gravel pit, and the local town only has an ice cream shop and a Canada Post? I mean, you're not going to get financing there. You know, are there horses on the property too? Let's just Salt Bay some horses on the property. There's a lot of risk out there when it comes to property. Again, if it's a marketable home in a city that's got a lot of people and a lot of ecosystem around it, employment, education, universities, you know, all of that stuff, then it's a marketable property. However, if it's in the smack dab middle of a city, but it used to be a meth lab, you're probably going to have some problems with that. So the property is a huge factor of this as well. I hope this has been helpful for you in this crazy market. Going in firm is not something that a mortgage broker should. Maybe there are brokers out there that are giving that advice. I certainly can't tell my borrowers that work with us at our office to go in firm on a purchase unless they have the cash to buy the house outright. If you have $1 million in investments in cash and you want to buy a $700,000 home firm, maybe that's a risk you're willing to take because you got the money to pay for it in cash if you have to. Just be cautious out there, because some people are going to get burned. People are playing close to the fire, and they're going to get burned. Whether that's burned in a correction, whether that's burned on an appraisal, whether that's burned on not having an inspection or doing a pre-inspection with your realtor and just going in firm for the hell of it. Some people are going to get burned, and you just got to really be careful when you're playing with fire. Leave some comments down below, guys. Really appreciate the feedback. If you have any, give me your thumbs up on this video because it helps us in the algorithm. And if you haven't subscribed already, please do so right there. Hit the subscribe button and hit that little notification bell so you can get notified when we upload more content. I'm Rob Campbell. I'm a mortgage broker. If you like this video, maybe you'll check this video out and see what you think about that one. Take care. Bye-bye.